All right. Hey, guys, we are going to take a look at crude oil, gold, and silver through the lens of Elliott wave theory. All right, here we go. Taking a look at crude oil first. Let me just give you some actionable levels. It is possible that it bottomed already right here, and I would consider that a meaningful parameter. Technically it's 69.99. Let's just call it 70. You don't want to see below 70. What you want to see if you're a bull and you think this is the low, then what you want to see is this to finish a 5-wave move up. So it's possible you already have a 1, 2 in place, and you would want to see a 3 come up into here with a shallow pullback and then one more shove to get up into this space. Now, that would be considered 5 up if it does something like that overnight and into Monday morning. And then you want to see a corrective retrace. So in other words, this 5 up would just give you a nano wave 1, and then you want to look for a 3-wave retrace. Usually oil's tracing these days down between the 618 all the way down deeper to the 886. Now, of course, that's not a hard and fast rule, but that's just a tendency. But the point is, we're looking for clues. So the first clue is you want to see price. If you're a bull, you want to see it get up into this area. If you think crude has a lower low to be found, then this is where I'd look for it. We still have these 2 open gaps, which these have been open for quite a while, right? For like over a week. Do I have that right? Yeah. That was last week. We had a massive gap up, came down, almost closed the whole gap on Wednesday morning, but it did not. It left this much of the gap open. So I like to keep an eye and keep track of gaps on my chart. This is also a smaller gap from the previous week. Let me just expand. I like to see the word gap as a reminder to myself that that's what this zone is. So if crude oil wants to close this gap, then at some point before it gets above this 71.40 fib, I mean, it can come up a little bit, but at some point, if it's going to come down and close both of these gaps and find support somewhere down here, which is where I'd be looking for it, it's going to break 70 first. Okay. So if you're writing down these parameters to guide your trades, if you want to try to go long scalp or swing long, you want to be very cautious as soon as you see below 70, if that's what happens. Okay. And then if it does get down here below 70, my thinking is it's going to crack the top of the gap. But if it's going to do this, I mean, typically what happens is it closes these gaps. But you can see it faked us out here right in the middle of the week. I mean, this is a giant M pattern. So wouldn't it be kind of poetic if price comes back down into this zone, giving you a sort of finishing this leg of the M? I guess some folks might call that a head and shoulders pattern. And we're going to come back to a longer time frame in a bit. But anyway, that's your parameters. So if 70 breaks, you really want to look for 68.85 or slightly lower, somewhere in here. And if price comes up, you want to see it get above 71.40 before any meaningful pullback. And by meaningful pullback, I mean, once it starts coming higher, I'm going to measure it from the bottom of this wave 2 right here, which is 70.17. I'm going to measure. I don't want to see any pullback more than 382% of whatever advancing move you get, all the way up to 71.40. I don't want to see a pullback greater than 382% of whatever the move is from the bottom of this wave 2, which is 70.17. If this is way over your head, just keep following the channel or join the club so you can get these updates twice a day inside of the Professor Trades Club. The link to that will be in the description of this video. Okay, let's hop on down now to gold. Hopefully, you've gotten your parameters for oil. Looking at gold, let's just get into some parameters here. This is really the way I'm thinking of gold. Either this is the bottom of an A wave already, in which case we already have another A. I'm expecting a B wave, which likely will not make a new low, and then get a final C wave up. But I'm still viewing gold as not ready to break out and go get another high. In fact, I think gold is beginning a multi-month correction. And really what I'm asking myself is this the bottom of an A wave and we're going to get a B wave and then a nasty C wave down? which all that's going to do is lead us to to another A wave. But don't worry about that. If you're just a short-term trader and a scalper, here's the parameters. If this starts coming back down from here, like if, in other words, if it does not come back up and get into this zone over here, and it just starts coming down, you're going to want to watch this zone right here where I've got this B wave, the bottom of which, just call it 2666. Sorry for the triple sixes. It's not by design. If you're superstitious about trading, I don't know. I don't know what the 666 means to you. Anyway, that's a parameter. So if price comes back down into here, watch the 2666 zone. And really, if this is going to play out, what's going to happen is it's going to catch support somewhere in here, and then C waves, which are composed of 5 waves a great majority of the time. So we're going to look for 5 up, 3 down, and then a nice wave 3. Honestly, there are some people that only trade waves 3s. I mean, look, you can see that on any of my charts. If you just go look at a wave 3 on any of my charts, you will see why that is the most powerful wave to trade if you're lucky enough to catch it. It doesn't matter if you're bullish or bearish. If you see a setup for a wave 3, you're going to get the most gains, the most bang for your buck. Anyway, so back to parameters. 2666 is the immediate parameter to the downside. You want to see that level support hold. If it breaks that level and gets somewhere down into here before it bounces, then I'm going to view that as we are in this wave 5. So if it breaks through this zone, I'm going to view the odds as shifting to getting this low over here. Just call it 26 something, 2620, 2630. And really what this will be is, just as I'm thinking right now, this could be an A wave over here. I'm thinking if it comes down here without making another high, if it can come all the way down here, I'm going to view this as the A wave. So either way, you've got a bounce to trade. Either you can trade a bounce from here, or if it plows through this before it bounces, and believe me, I'll be measuring and updating this in the club. If it breaks this zone of 2666 meaningfully and comes a little bit further down before it bounces and then makes a new low below this low, which is very close to 2650, then I'm liking it to come down to 2630, somewhere down in here. And I'll consider this the A wave. And then I'll be looking for a crazy B wave bounce and then another shove lower, because I don't believe this is enough time. Enough time has not been burned off the clock for the correction in gold. Okay, so there's your parameters. And by the way, this high right over here, just because price comes up and breaks that doesn't necessarily mean this has resolved itself. It's going to be much clearer if price can come down and get into this zone and then bounce, and do so decisively with a 5 wave move. Just because let's just say it comes up higher directly from here and it gets up into here, that doesn't necessarily clarify anything. This is too shallow to be a B wave. I mean, it could be, but I'm just giving you odds and what I've observed over the years I've been doing this. So this is too shallow for a B wave. So here's the worst thing that can happen to lack of clarity would be if price just comes up and gets into this zone, because it could still be a wave 4. Wave 4 is a variable wave. I kind of like this as an A wave because this does look like 5 up right here. So if that's the case, the B wave should come back down from here. It should not get back up into this zone if I'm right. It should come back first, get into this zone, then bounce. Okay, so those are your parameters. All right, now let's take a look at silver again, just for parameters. Not too unlike gold in the sense that it would be better if it just comes down directly from here, but it's always possible. Anything's possible that this could be done. It could bounce right here, but I think what is more likely, what would be better, is if it comes down to this 100 fib, which also coincides with this 1618 fib. So I've got two different ideas. The yellow fib is for this as being an A, B, C, which is standard fib for that is the 100 fib. And then I think it's rather interesting, the purple fibs, the 161. So by the way, let me call out the parameters. 3112 if you're short, and ideally short, it should stay below 3155. So if you have a tendency to want to be shorting silver, or if you already are short silver, 3155 is a reasonable parameter. And if price cannot get above 31.55 and starts coming down, I like this as a target. Too bad price never moves in a straight line. So even if it's going to hit this target, it's not like it's just going to drop and go straight down here. It's going to look at price of silver, man. It's crazy. It goes all over the place, but I'm just giving you parameters. 31.55 is immediate resistance to the upside. 31.12 is an immediate target, and then a deeper one would be 30.92. 30.92. And the real question is if silver does make it down into this, whether it be 31.12 or 30.92, either way, I'm going to be viewing that as an A wave, similar to gold in the sense that it needs to bounce again, but it will likely not make a new high and burn more time off the clock and get a deeper correction. Okay, in silver. So those are your parameters, right? The deeper one, 30, just call it 30.92. The intermediate low could be 31.12. And the ceiling for the moment is 31.55. And obviously, this level at 31.96. So all of this is playing out within $1. But, in silver, $1 is just a huge amount of pips. So I realize this is a wide range, but, hey, welcome to silver trading. All right, guys. So hopefully I've given you a bunch of actionable levels. So if that's what you came for, grab the levels and be gone. Cool. Look, if you're finding value here and you like the channel, hit a like to encourage me to keep making these videos at least twice a week. And if you're interested in learning about following this kind of work, and the Professor Trades Club is really where you want to be. My man Armando, that is the professor, is putting out amazingly valuable content all day long in the club. I'm posting these LA wave charts several times a day. For less than $1 a day, you are not going to find that kind of value anywhere on any of these clubs. Ask me how I know. So I encourage you to click the link in the description of this video and join the club, or at least follow the channel. And the way you do that is hit the subscribe button, make sure your notification bell is on. So anytime I drop a video, you'll get alerted. Okay, so now what I want to do, now that I've given you your actionable levels, let's go back and zoom out on the oil chart, and I'll talk about oil, gold, and silver from a little bit bigger perspective through the lens of Elliott wave to give you an idea of how did I arrive at these levels that I'm giving you. All right, so let's go back and take a look at crude oil, looking at a 4-hour chart, which for the moment is really all I need. Really, my question is, I think we have a series of 1-2s here, meaning 1-2 and another 1-2. But the question is, where is the bottom of this? Okay. And if it wants to come deeper, 68.83. Now, remember, I was just showing you 68.85 on the zoomed in version, right? That's the low that I would prefer to see in crude oil. If it wants to come down here, that would be right through here. It would still be considered a wave 2, but I might have to do away. If it breaks the low of that 2, it makes a lower low, fine. I'm just going to I'm going to measure that as the 1-2. Okay. So I'm going to get rid of one of these. Right now, there's 2 1-2s on there, the white one and the purple one. So if it makes a newer low and comes down to that lower zone down here, I'm going to view this whole thing as a 1, A, B, C, 2. So what I'll do is this 1 will stay, and I'm going to move over this white label to down here, and I'm going to get rid of the purple one. Well, there'll be the next 1-2 that develops if it makes a lower low. Now, look, I'm giving you some Elliott wave education here. Let me zoom in because I know a lot of you guys are on screens and whatnot, small screens like phones or tablets. So I'm so sorry. This type of education is best on a full-size screen like a laptop or a computer. But in any case, if this comes down and makes a new low and holds this box, now I'm calling for this area because that just makes sense for an ABC. But as long as it holds, I mean, honestly, the ultimate stop if you're long, now this is super wild, but this is pure structure, is down here. Whatever that level, what is that low right there? Just call it 68.70. So, if you're above 68.70, my bias is bullish. It's just a question of where is this thing going to bottom. So if it does come down and make a new low, all I'm going to do is consider this the A, B, C of this wave 2. So that's still bullish. It's just, how does anybody know where the bottom is? Well, if you're an LA wave guy, the best way you're going to know where the bottom is when you see 5 up. That's why I'm always speculating. Is this going to be 5 up or not? And I know where I'm wrong, because if this comes back down, the warning shot is 70.17. That's the warning shot to bulls. If you want to be a bull from here, the warning shot is 70.17. By the way, this is December contract futures. December contract futures on the NYMEX. Below 70.17 is the first warning shot to bulls. But if it breaks 70 with feeling, then you can believe the odds are shifting that it wants to close these gaps and come all the way down here, which is really nothing more than support coming down and testing the 618 of the whole structure. That's all it is, right? Once you understand this context, it's pretty amazing. And then that would just be an A, B, C. And you can see this B wave can be composed of 3 waves. So there's another A, B, C inside of this. All right. So this larger time frame structure using Elliott wave is what informs me to come in here and look at the nano stuff and see how is this unfolding. And just as an aside, these gaps typically in oil get filled. Unlike natural gas, which the professor is always teaching us this, and you can observe it for yourself. Natural gas, man, gaps stay open for a year or whatever. Crude oil, that's much less likely. So my leaning is that it wants to come down here. It had every chance for this to be the 1-2. It had another chance for this to be another 1-2. And it had a chance for this to be bullish if it had stopped right here. But it didn't. It didn't. And it broke this low. So the next low to break is this low and this low. So this structure is very difficult, but we use parameters to guide us. And that's why I always look at the 4-hour to look at the overall structure and then drop down on the lower time frame to dial it in. So let me move these labels back. So I just reminded myself what I'm originally looking at. And we will just see if price wants to come down and make a newer low or not. Okay. And then gold, kind of same idea. Let's go look. What gold chart did I show you? Okay. I showed you the 34-minute gold chart. Here's the 4-hour gold chart, which is actually very similar. So if I really zoom out to the daily chart on gold, do you recall how I was saying either this is a wave or it needs another low down here for the A wave? I'm not sure which one is which. So let's just say, for example's sake, that this doesn't come down again, that it catches support in this B wave above 2666 and then gives us a 5-wave structure up from there. If it does, the expectation is that that's an A, B wave, C. And that C, now I haven't measured for that because that would be wildly speculative, but let's just say it's 2600, just so for the point of this educational content. So if this comes down a little deeper, gets a B wave bounce up into here, and then comes down to around 2600, I will consider that an A wave, especially if it does it in short order, like fairly quickly, like meaning before the end of the year. So I will consider that an A wave. And then, so you got 3 waves down, 5 waves. You'd have 5 waves down for an A wave, or 3 waves down for this A wave, A, B, C for a new A wave. And then from there, I'd expect another bounce in a B wave and another deeper final C wave down. Because the reason I'm saying that is I think the wave 4 of this degree needs to burn more time off the clock. That's all. And this line right here is not unusual for a wave 4 to come out this far in time. Although, given how bullish gold is, I wouldn't expect it to burn that much time off the clock. But I will not be surprised if this correction takes months, like February, March, April, something like that. But I'll know more. It depends. If it's in a hurry, it's going to do ABC right here, and then another ABC, and maybe you get a higher correction than what I'm talking about. Maybe it takes less time than what I'm talking about, because it's certainly not up to me. And I'm not predicting the future. I'm just showing you the parameters based on time and price. But this type of long view on the daily chart is what allows me to create this type of view on the 4-hour chart and then dial in the details on the 34-minute chart. And here's what's wild about Elliott Wave. The same Fibonacci on this long, super long daily time frame is the exact same fib concepts that you use on the 4-hour chart, which are the exact same Fibonacci concepts that you use on the 34-minute chart. It is the same thing as the way a candle guy like Armando, he always starts you with the 8-hour. He loves the 8-hour because it gives you your perspective of the playing field. Then you go to the 4-hour and the 1 hour and the 30-minute, in his case, the 5-minute or the 15-minute. In my case, I like the 34-minute. And if when I'm really getting crazy, I'll go down to like the 8-minute. But anyway, so that is the longer term view of gold and why actually, I have not mentioned this before, but perhaps I should mention it right here because as you know, anything can happen, right? So I have this other ratio box up here, 2840 to 2892. And just for right now, just imagine 28, just call it 2850. So this at the moment is 3 down. Okay? 3 down. And as you know, if you've been following Elliott Wave at all, 3 waves down can be a correction. And this does look like 5 waves up. So here's the parameters. If price is going to come up and make a new high above 2850, the way you're going to know that is this is going to come up. It's probably going to still get lower. But if it holds support here and starts coming up, the first clue is you're going to plow through this box. And then guess what? You're going to keep coming, building an impulse, 5 up, 3 down, then another 5 up, and then another 3 down, and then an extension that is going to come up and plow through this B wave box. So this is why I love Elliott Wave. You're going to get parameters. You're getting context of price. So I leave this ratio box on my chart because there is potential that this is just another nano wave 4 and the real wave 5 of 3 is up in this box. I know, I just said a lot, but if you rewind all this and listen to it again and take some notes and make sure you understand what I am saying. And if you don't have a question, please drop it in the comment box. I will be happy to reply. Of course, if you're inside of Armando's club, theprofessortrades.com, you're asking me questions. I welcome your questions. I'm always happy to answer them best I can. So that is a possibility that this is the low, although I like that less, but it's possible. And the way you'll know is it's going to plow through those zones here. And, you got the parameters for those zones already, 2742. If it gets over here, it ain't a wave 4 anymore. I mean, if it does not make a new low and comes back into here, it can still be a wave 4. But if it gets above into this area in price and time, the next option is it's either a B wave or we're going higher into this box. But I'm going to very likely know that based on whatever structure develops in this area, because that's the strength of Elliott Wave, is giving you context. All right, so that's gold, right? And I just covered oil, gold. Okay, so silver, zooming out on silver, it's kind of interesting. It's not too unlike gold at this exact moment in the sense that I do think we are getting a deeper wave 4 correction, which is why I am now out of all of my longs in my Roth. Those who have been following me know I had some longs futures happening in my Roth and was never shorting, only taking off longs and then adding them back on these dips. And now, because of the way this played out, I'm done. I'm back to scalping. Now, I may scalp long, I may scalp short, and I may not scalp at all. I'm only going to trade silver going forward at what I think is more higher probability moves, because silver really can punish you, as I know from experience. So the longer time frame view that I have is that we are just barely into wave 4 territory at the moment. This whole entire box is fair game in terms of price and time to get this larger degree wave 4 correction. And as you know, wave 4s are variable, difficult to track, and typically move in threes. And if it wants to get complex, it can move in complex versions of 3-wave moves. So at the moment, one possibility, similar to gold, is that this wave 3 is going to give us a proper wave 4. The question is this wave 4, or is it going to hold this B wave? Now, this is very similar to what I was just showing you in gold. It says silver's a little further along in this nano count. So if this is going to hold right in these yellow fibs somewhere and then give us 5 up, okay, up into here, the biggest clue that you're going to get if this happens, the best clue you're going to get, if this is a C wave as 5 up for wave 4, the pullback is going to be impulsive. It's not going to be a pullback. It's going to be a new 5 wave impulse, because this wave 5 of A into this target box, which is the ideal target box, if this wants to complete a 5 wave structure from here, if it wants to go directly lower, this is the target box for that. If it wants to bounce and get higher up into this blue zone, wherever it tops from and starts coming down, if it starts coming down impulsively, which means there's a nano 5 wave move, that's going to be the clue that silver is going to come down lower. And what we'll do is, after 5 down, when it gets a retrace that should be composed of 3 waves, we will attempt a short to catch some of these pips in the 3rd wave of 5. Because as you can see on any chart, look, wave 3, this is what you want to catch. On the way down, wave 3, this is what you want to catch. Always looking for a wave 3. Even on a nano basis, there's little nano waves inside of this. Like this is 1, 2, 3, 4, 5. Because wave 3 is composed of 5 waves. Anywhere you have a wave 3 is going to be what you're trying to capture on any degree. All right, guys. So I hope I haven't confused you, but that's the deal. So silver, whether it comes down directly or gets another bounce and then comes down, I'm going to view that as an A wave. And subsequent bounces from there, I'll track and look careful for where that may top out so we can get short again. Because I really think that silver needs to burn more time off the clock and come down lower. Now, as I said in gold, of course, it's always possible. If it catches support right where we are at this exact moment, your clue, just like gold, if you see price and come into this zone over here above this line at 32.26, it ain't a wave 4 anymore. Okay. So that's your first clue that we've already bottomed in an A wave and we're getting a B wave bounce now. And if it keeps coming and makes a new high, man, then that is going to be the top of this wave 5 and this 3. So I don't know the future, right? But I have parameters, and I'm sharing with you how I derive those parameters from the longer time frame. Okay, guys, cool. I hope this was helpful. If it was and you're getting value here and it's helping your trading, please hit the like button. Also, I'd like to put my link to coffee. Love coffee. This machine runs on coffee. A lot of you guys have been buying me the coffee. I really appreciate it. All it does is encourage me. It's like an energetic exchange. You guys motivate me to keep doing this. You may not realize how many hours it takes me to measure all these different, because I'm measuring way more than what I'm showing you. In fact, I'm trying to present less to you guys on the chart because it can turn into spaghetti. But I'm constantly measuring. It takes a long time to do these measurements, and I love doing it. But if I know you're into it and you're liking and you're subscribing and you're commenting, asking questions, it just encourages me to keep going. Thanks for watching, guys. All the best this week. Whatever you do when you're trading futures, don't get killed. All right. See you in the room. The Professor Trades. Adios.